Hello, everyone. Welcome to April 3rd, 2025 PPT coaching call. I'm your host, Matteo Sandero, here to give you a market update. And I will be sharing my screen now, unless I am. There we go. There we go. Okay, so second, getting my tools ready. Now, we talked about a couple of days ago that there was a potential here for a bigger picture balance breakout pattern. We got that, but then we talked about how when we got up into an even bigger pattern, namely this bigger picture bias that I've been talking about, which I had written down, that we could get sellers active again. We got something terrible, really. We got a breakout back into below the trend line. That is a false breakout pattern. And on top of it, I've moved this blue moving average, which I usually have at the 40 to the 50. And I'm going to just get rid of this one for a second. It's a 200 and a 50. The 200 is the slow, the 50 is the fast. Okay? When the fast is above, okay? When the fast indicator is above the slow indicator, namely when the 50 is above the 200, we have a golden cross, and it indicates that we're going to have a trend continuation. Also, we have a giant balance. Not that I even needed to see a golden cross. This is a balance breakout pattern. We know all trends end in balances and all balances end in trends. Now, right, we talked about how after we hit this pattern, we could go up into the bigger picture bias. This was a 3-day balance breakout pattern here. But remember, even though on the smaller time frames, this looks pretty powerful. Zooming out, this pattern is only 3 to 4 days bounce breakout pattern. Once it came up into this big picture bearish bias, especially on relatively lackluster momentum and relatively mediocre relative volume, potentially that the bigger pattern, namely this bigger pattern, was going to win. Pattern versus pattern, you should bet on the bigger pattern. Now, my strategy was I got long here and held runners in here, anticipating potentially that we could have sellers active again. I'm glad I didn't just short here. You can see there was this false breakout pattern, but once we saw that on the lower time frames, when I went all out of my longs and then I went out of my swing trade, remember, entries are exits and entries and exits are entries. Technically, that was a short signal, and I should have shorted, but I didn't want to short on technically my portfolio and everyone's bags emotionally, and I was good for the day with profits. But I'm just saying, correct process, that was a short. But my bias as an investor is up, so I have to deal with that on the short side. Although clearly, from a trading perspective, has there not been way more opportunities on the short side in the last few months now? I call the big picture, I define as 1 to 3 months, right? In a multiple time frame perspective, this is the big picture bias, right? Now there's infinite time frames, but I use 3 on our system. This is 1 to 3 months. The short term is 1 to 4 days, and it's also not just time, it's magnitude of move. And then the intermediate term is like the last few weeks. So even though there was this sort of V recovery here, and we had this wide double bottom into this bigger picture support here, we have major support here. I think that if we do break down into this trend line, we fail here and this breaks, we could get a double bottom, right? That could potentially, we could get an overshoot here into this major support here, right? That's what I'm thinking might happen. Okay, at least that's a scenario that if it does happen, I'm going to be extremely bullish at that point. I'm going to be actively looking for setups for a reversal at this major support zone, all things being equal, right? Now, the problem right now is that you have to think on terms of multiple time frames. If you were only looking at this V pattern, you were only magnified on a smaller time frame, say like a 15-minute chart, then you would only be focused on that. Now that we've zoomed out, we know exactly what we hit into. Now, exactly where we were today. My setup for today was don't trade, guys. That's a position, okay? And the longer that you do this, the longer you will realize that not trading is trading. This is a counterintuitive business. If you're into sales, if you're into like the grind, and the more reps in this, and you will lose all your money. It's the opposite. You could spend 8 to 10 hours doing other trading activities, recording your trades, back testing, right? meditating, going to your journal that I have for you guys that I put together. All that is trading. You don't have to actually press the button to do work as a trader. And also, not trading is trading. You can walk away and do something else. Get up and leave the screen. That's what I also, so that's was the setup today. Right? And was there opportunities? Well, let's say, like I said, that the S&P and Bitcoin have been mirroring each other, and the Bitcoin has just been, for the most part, a more volatile S&P 500. That is until today. Here's the decoupling, guys. As of right now, Bitcoin is holding at the support zone, right? I'm going to show you a chart that I made earlier showing this, but look what happened to the ES today, guys. This is why I wasn't down to trade. Now, I traded this double bottom here, but when we had the bearish divergence up into here, I exited my trade. Yes, I could flip my bias and go short real quickly, but I'm giving these signals live to everyone. And I also have an emotional body here as well. People say, why don't you give so many shorts? I do short sometimes. But at the same time, these sell-offs are pretty strong. And remember, I told people to get out from a portfolio here, and people were asking me, when do we get back in, Matt? I said relatively here, but not thinking that we had to have this giant reversal. Why? Well, let's zoom out here. Why was I confident saying call your portfolio manager and tell them to cash out? Let's zoom out here, right? I talked to you about a principle, the 100% range principle, right? We know that all balances and markets move in series of thrusts and corrections, trends and balances. When we move 100% of this range, right? When we move 100% of this, hang on a second, I got to get my dogs. I'll be right back. Okay, so we talk about 100% range principle. What you see how I cloned this? I cloned this way before this creeped up here. My larger time frame bias was bullish until my leg count principle, which is on your trader sheet that I've developed, meets your 100% range principle. How many leg counts up? How many people are happy here? All the smart money up around here is happy. 8 leg counts up plus 100% range principle. You clone this, we move up here plus triple top. That's it. You're done. You have to exit. Now, I called that before that even blasted down here. Now, everyone's saying, I said, this is way more tricky to call the lows now. And I did basically say there could be a turning point right around here. There was a gap here. We broke through that. That was the first area I was talking about. And I'm not just looking for key reference areas horizontally, right? We have to imagine how price has gotten down there, right? Price right now, if we just zoom in on a smaller fractal here, just had a balance breakdown pattern, right? Price came down here very with strong pace and momentum, and then we moved 100% of this range into here. Of course, the intermediate term downtrend now, which has been the larger time frame bias because of this magnitude of move in the bounce breakout, is now potentially, at least in the short term here, and I could draw a fractal around here. There's a high volume node here. We broke out, right? I wasn't surprised once we came into this that we were going to have some relief. And I said that before that happened in Telegram. But this was a day where we shouldn't have traded, and this was the right move. Now, shockingly, the ES and NASDAQ and the Russell do not necessarily move like this. I haven't really been watching. Now, there was a CPI number, but it really wasn't something that, let's see exactly what this looks like. I stepped away. I had other business meetings, and this is the secret really to keeping your account is not trading, which is trading. Unless you're the master guy. Now, of course, when you have a giant move like this that broke market structure, in my mind, psychologically, I know there's shorts coming. I'm not emotionally the best at putting on risk at this. Fibonacci break back up continuation, but it's okay to not trade here, right? That's fine too. But you can just see here, just imagine not only in terms of the system, which I've mind mapped out for you and put together in terms of your cheat sheets. Just imagine the market in terms of the social market participants, right? The bulls struggled for days, like a couple days here, and this was a back and forth effort just to make it here. And then in 1 hour, they got destroyed, right? Markets fall faster than they rise because the larger time frame bias is still bearish, right? And psychologically and emotionally, they were pretty done. That's why it wasn't even worth trading here. And of course, I had a gap here knowing that this was a major zone. But remember, I'm not just going to fade any reference zone because I'm not fading against the trend. So we have to come in with a pre-market plan that determines whether we have odds for not directionality or non-directionality, and then our setups go according to that. But oftentimes they're ambiguous enough where those probabilities are maybe not so clear, or the scale's more balanced, but the risk reward's there, and then we just stay out. And that was, in my opinion, the right move today. I'm actually, I've stepped away. I've actually, the first time I looked at the market, I'm shocked at the ES and NQ uh, continuing today. But you know what, though? Interestingly enough, Bitcoin and Ethereum has held up. Now let's look at a few different charts here. Right. Now, we talked about how if we were going to have an alt season, which was, I told you guys this prior to this was the low rod scenario. Once again, we're similar to the S&P, right? We're in this giant extended bull. We've moved 100% of the range, but Bitcoin keeps on going. Notice the V recovery here, right? And notice that even though we've had this buying tail, we're still creeping higher. If we were going to get alts recovering, we needed to see a sharp sell-off here at this Fibonacci ratio, right, which coincides with this strong launching point of directional conviction, which started this downtrend and a phase shift out of this giant balance. Now, I said actually, if we can bear through the pain of this, we would like to see Bitcoin rip again, right? And then eventually get up to here where we could potentially, if we have resistance that, we have a higher odds of an alt season at that point when we get a sell-off. But besides predicting those types of things, let's take a look at our Bitcoin weekly time cycle chart here. Right? You can see that in November, right? We said first mention that based on our decode of this particular time frame, right, cycle, that and based on a pattern that markets, right, shift from different phases down to sideways to up, that there was good odds that in the first week of January, they coincided with this time cycle that we have a phase shift. Now look what happened right in that first. Now that's a live signal the channel is as well for our investors, which is around 15, 16,000. Look what happened. We phase shifted right up into that. Now look what happened the next time we had this time cycle, right? Now still, right? Slight decrease here, but it's not perfect, right? It still continued on. It just was a slight move down, right? But here, right, at this resistance zone, the continuation of it, here, pulling back, another decode, continuation of it, and now here, right? Which unfortunately, right, is this candle. Let's move this out of the way so we can get a better picture of this. We're in a tricky spot here because, we've had this balance breakdown after that many legs up, which suggests that, we could bounce up here and probe lower here, which doesn't coincide with past cycles. But if you remember in 2020, when Trump took office, there was this tariff talk and whatnot, which, produced this rapid sell-off and COVID heaven. Then we had this giant bull market. So depending on how this candlestick closes, at least this time cycle chart predicts that we're going to have some resolution out of here. It predicts some aspect of directionality, but it doesn't give great odds as to which direction. There's another chart that I created that I want to show you on our live Telegram room. Right? So I said, this is what I was afraid of. Now, I posted this chart prior here. Let's go to it. Okay, here it is. Okay. So this was published on March 30th at 5:11 p.m. This is scenarios of timeframes playing out, right? So I'm just imagining. So this is why, for our day traders, I was giving long signals, came up into here. Now we got this overshoot. That's even worse. That's a false breakout. But the idea is that once we got up around here, and I was even being conservative, hey, we'd have problems sooner. But I was a little hopeful when we had that. But that always gets you, right? That false breakout. You could see it in real time. That's why I exited everything. right? Then was going to bring us down here. Now, I just imagine that we just needed one more flush out. There's no beauty here in something going, I'm open to being wrong. I hope I'm wrong. I know I'm biased for the upside. We all want this to go crazy. But if you just imagine, right, this beauty principle in the market, there's literally no wide double bottom here. It's scrunched. It's hitting a pattern that's bigger than any type of double bottom here, right? What I would, unfortunately need to see happen or like to see happen is that we would, and it looks like it is happening, is that, we got this. Now this is coming down here. We're holding here. It wasn't good enough for me to go long because you can see I'm more, right? And then I'm imagining, yes, there probably would be this obvious double bottom. But if this thing comes down strong, there's this double bottom. This is a pure double bottom, but imagine this inverse double bottom, right? Where we get this overshoot we talk about. And this is when I would really get bullish. If we got some kind of false breakdown into this, right, back up, that would be sort of a nice extra edge because you'd be getting this, right? Now, what is this? This is the top of a boom, multiple giant bounce breakout pattern, major support, right? Now that would take us into mid-April recovery, which is sort of coinciding with that Bitcoin time cycle chart because that is a weekly chart, and there is some time that develops. It's not like, oh my God, on March 31st things have to get directional. They actually kind of did. So that's for the investor. The buy and hold strategy is what it is, but how are we going to use some allocations of our capital to make money for this month's bills, right? We have to have income producing capital, and then we can do this buy and hold thing. And that's what we're doing. So with this, we use an anti-martingale, not a dollar cost average risk management strategy where we have a rule where we do not lose more than 1.5% of our capital. And I highly recommend that you try to get good enough trade location where it should be less than 1% to about 1%. And you should have a certain amount that you would risk to lose on a day. I don't think you should lose more than 3% of your capital on full size. Now, this was our first winning trade this week. This was on March 31st. This was a Bitcoin swing trade into this initial support is the daily long setup. I gave a heads up that right here that I would be going long because, this was a decent bubble bottom. We had CCI inverse zero line reject confirming the momentum was going to be, at least for us in the short term, bullish, right? We went long into the support. Now I fade key reference zones. I have to buy things into this initial support as a daily long setup as they're, looking bearish. Now I did get a little action reaction here. That's fine, but you can actually on the smaller time frames really fade these when they look the worst. Now we don't fade against momentum, and that's one of our categories against us. But they're, if we're fading non-directionally, we're going to be fading against the intraday bias. That's just a weight against you. That's just the nature of it. So, yeah, right. This is the day week. I said, remember, it is easier to predict a trend than to predict the direction of the trend. Sometimes odds line up where there is good odds for trending, but not good odds as to which direction. Now, anyone can see momentum intraday, but what kind of things would you look for before the market opens for these, right? And I'm going to get into that because we have to think ahead of time and plan these scenarios out, right? We look for pre-market factors that increase the probability for a trend. For example, one of them is no secret. Do we have market moving news that day? Is the Fed Wizards gonna give some type of thing? Now, we know the rule isn't so linear where good news is up, bad news is down, because we don't really know what the big players' views of the markets are, despite whatever news they're putting forth. So really what I recommend is I'm not actually putting on new positions 30 minutes before the news event and 30 minutes after, because I'm not getting whipsawed out by volatility risk. What I really want to do is get it on a good trade location on a sideways up or sideways down type of call, where I'm already half off with the stop to break even, and I'm just hoping that thing just ricochets up. And great, let's let it go. I mean, I've made the most amount of money on any trade on an ES FOMC day when I was already half off, and I let my contracts ride up. I was like, I've never even seen Bitcoin. And I was leveraged. That was crazy. But I would not want to ever just enter that, seeing that in real time, because how many times does it look like it's going to start that and you get destroyed? So we don't buy breakouts at all in that type of context. It's just not. There's no edge in it. So, right, we talked also about Ethereum. Ethereum also had a nice wide double bottom. We had this hammered kind of slowdown confirmation day, and then now we have the lower risk signal today. You obviously, I didn't give this one live and I didn't take it. One, because Ethereum just got hacked for 1.5 billion on the exchange that I trade live at. I'm literally terrified that, I could lose everything. And people say, well, why don't you put on a bigger amount on your exchange? I said, this is exactly why, guys. Now, I'm not saying a buy and hold doesn't have risk. I have huge volatility risk with buy and hold. But remember, volatility risk is only implied risk, right? Real risk is risk or ruin. And I think that we've really researched here really good projects where even though the sentiment is the most bearish I've ever seen, and I've been in this game for over 10 years, the sentiment has never been lower, but the fundamentals for these have never been stronger. I mean, look at the fundamentals of where Theta is today technologically with their Edge Cloud 2.0 that's about to be developed, or where some of these RWA are getting government contracts. But their prices have never been lower. It's, I gotta remain clear-headed because emotionally right now it feels like this is blood in the streets. But then say, okay, is there opportunity here? Yeah. So we got to admit Timothy here in the room. Okay. So, right. So I said, giving it that it was a daily setup, I said, this is a wide double dot bottom price pattern at the purple key reference area that launched just prior and held. What is this? Then we say, what is this key reference area? Well, it's an area that acted as a line in the sand across multiple years. It's a huge inflection point and a giant launching point of directional conviction. We know that big zones, this one namely, create big moves. Okay. So now that we can't, I'm not saying you had to come down here on first test. First test does have the best odds of a reaction. I drew this zone, guys, ahead of time before we even came down here. So you could actually just fade this on that day. But let's say you wanted to wait for a more confirmed entry, then you'd wait for not on the 60-minute or not on the 50-minute, like I say, on the daily time frame, a wide double bottom. Now you have a lower, nice confirmed entry that's psychologically easier to get in. I'm not saying that this double bottom has better odds than first test, because first test, when we have one leg, two leg, three leg, four leg, six, seven, eight, seven leg, eight leg count down, right? After we had this inverse W pattern that came down and we had the breakout, now it's slightly exhausted. We're looking at, is this trend down short-term exhausted? If we want to fade counter directionally against this. Now, the amateur, let's go back. What did I do? An amateur trader would wait for the breakout and then start to buy as it comes here. He's only looking at a pattern that's over a couple of whatever here. This is very small visually compared to this giant downtrend that we're coming into. Everyone who bought here at these buying tails is now going to sell at break even. You're going to get smashed. These are actually, when you use a fib ratio to reverse this, great short entries. I'm telling you, the shorts move so much faster. I remember that entry that I basically said here. It's just psychologically hard for me to short right now, live for people, and the fact that I have so much capital as an investor. But you could just see, why did I go all out? But here was this swing trade that I got in at 80,401, right? Timestamp 1602 hours, 402, right on the money. I'm also putting on real risk, so I'm trying to time this with my money and for people that are shadowing me in this channel. And this is a real-time channel, so there's a lot of data here, years worth of trades that are all pinned here. So that was a swing trade that I took off risk intraday, half off, stop to break even, but I still took off. I still went all out here. You might say, well, most traders might just like, I'm not, even though it's not perfect, I should have got out here. This is when I got out of my day trade from that day, right? The day trade was the day trade was like around here, but we still got out. We didn't come in here. But, the swing trade from March 15th, at that point when it was up here, I still was holding, but then you came back here. I have a new market view. This was technically a short signal, right? When it came out up here, not at this point because you're waiting for confirmation, but as you saw the tail, which we were already prepped for ahead of time because this was coming up into that larger time frame bias. So, right, I'm leaving in the runner from March 13th, but traders have to be nimble in their thinking and not married to any idea. This was at 351, and then I changed my bias and I went out. So, right, I said Bitcoin reacting at strong resistance. Notice price trended till it hit my key reference area acting as resistance. This is when I was going to short. I just didn't want to short on everybody in the channel, right? Because 101% relative volume, there was a potential. I had runners in for the long, potentially, right? But this was actually where I was thinking, shit, this is where my zone said to short the damn thing because really we fade on strength here, but you can wait for certain buying tails or volatility. That would actually be a selling tail on the upside. I'm sorry for a volatility spike when we got it right. Right. So we said here at this point, Bitcoin really needs to show some upside strength and conviction here if bulls have a chance to break this very bearish trend line. I wasn't very confident at this point. While I'm simultaneously like hoping, I feel like, oh, I really want this to happen, but you can't let it see what's really in front of you. You can't let it cloud this very systematic mind map. This isn't just, even though this is contextual, there's literally probabilities that we've stacked, and you see it in the system cheat sheet that I have you guys sent. So there's this bigger picture balance breakout pattern of 4 days, but that pattern is smaller in size than the bigger picture downtrend bearish buy. So it'll be a battle, which is why I only have runners in and see how the market tips its hand. I wasn't, as hopeful it is, but there was some opportunities in the ES here. Let's see, right? I I, I have now I took this pre-market because I have one other edge. I have the internals when it's open, but that still was a winning trade. So we took some winners yesterday, and then we got out, and then we sidelined today, and it is what it is. This is that false breakout pattern, and it's bad, right? This is what I was afraid of. So the larger pattern wins for now. Pattern versus pattern. Now, I know I have a mind map of some aspects of this, and I want to show you briefly because a picture is worth 1,000 words here. Let's see. While I'm looking for this, is there any questions about anything? There's a mind map of certain aspects of my system that I posted. I'll have to find it. I'm not going to waste any more time trying to find it, but um, it was important because it shows you how the scale can tip things for against you, and it's a clear image. So it's like basically everything that you do, whether you win or you lose, it's on the system, not you. So, like I said, NLP, when you get out of a trade, win or loss, you know, yeah, I followed my system, and that's what great traders do. I followed my system, and that's what great traders do. Um, and if you make a mistake, well, great traders quickly recover from mistakes, and I'm a great trader. So we link basically quickly recovering and being kind to yourself so you can focus again and get clear-headed uh, with a mistake. So yeah, basically, principle of the day of April 3rd, which was today, this was at 7:37. Entries or exits, and exits or entries, and entries or exits. I went all out of Bitcoin trade from live signal Monday, which I gave, and it's in the pin. You can go back and find it. Due to this buying tail real time, which by the way, this is when I was technically my system 100% says to short. And if you have psychologically had trouble shorting when my system says to short, just invert this and think of it as a long setup. You would so want to go long if you flip this upside down. All out of a Bitcoin trade from live signal money due to this buying tail real time, plus prior top-down discussions of sellers being active again at the bearish, bigger picture bias downtrend line. So yes, as this zone wasn't just any zone. This was actually that daily downtrend line. So then we saw this right at that same time, right? So that was enough for me to go all out of everything. That should have been good enough for me to go short, but I didn't short against it. Will be still captured alongside. And then that was actually the high. That was when we've had that would have been a great short. We can go to that exact moment, right? That was around here, right? And then you know, and you can see like these. What are these? I have a whole lesson on why how I draw my key reference areas. So every two lines is a zone, right? And they're based on really human behavior, but the system really is just simple. We're going to figure out the day type based on the probability of whether we have a trend or not, which I've listed in all these different things. And then we use these zones to get in. But we're not just going to fade every zone, right? We have to do it with the right market context. So we have to figure out who's in control of the day, who's, what the larger time frame bias is, what the intraday time frame bias is, what the momentum environment's like, whether we're exhausted short term. It's been difficult because they're at least right now, right? The last month or two, bears have been firmly in control, right? And that's to be kind of expected. But this is an interesting decoupling right now I mean, you would think these are almost crypto like losses right now for the S&P, the Nas, and the Russell, while such, with huge market caps. Meanwhile, SWE, which I've invested a huge amount in of this cycle, everything from down to 80 cents. When we started to give signals to some higher ones that, are a little bit underwater right now, but we're still, I put in, I think, 50 grand here. That's when I told you, I give a story on this. I'm going to say that this is when I was on vacation. I said I was on vacation. A rule I have is I never trade or make investments when I vacation, funeral, death. You move, you're off. I did zero analysis, was having fun, took my coop out there, and didn't even look at the damn thing and say, hey, well, such and such is got invited to the White House. Trump's son said this. I said, you know what? I'm just going to bet 51K on the son. It's like, you know what? That's bull crap. It's like, I can't just say as a buy and hold investor, I'm just going to indiscriminately throw some in because it goes down a certain percentage. You have to look at the real market context and be okay with missing out if you want, because there was absolutely huge. I'm not even saying this in hindsight. I mean, guys, this is a rookie mistake. I'm just saying, like, I feel bad. I told everyone I went in heavy here, so I hope someone didn't shadow me. I think it was at 280 something, right? And look at this inverse zero line reject. That's a rookie mistake, right? We're not even multiple, we're not even 8 to 9 to 10 leg counts down with a giant Y double down bounce breakout confirmed. That was a freaking sell signal. I just wasn't paying attention. It's a trend line here, you know, new stuff. And I had plenty of time to get out. I didn't buy up here or whatever, you know what I mean? It went up to three something. That would have been a great trade. But in my mind, now I'm an investor. Trump's son believed in it. Ah, shit, it's going to be fine. No, this is bullshit. You know what I'm saying? So it's like, I'm from now on, I'm just, if my, day and swing trading signals are as specific of a criteria, I think the buy and hold stuff, because I differentiate between like, hey, buy and hold, reload portfolio, that's DCA, aka you're going to probably be a freaking loser. It's just Martingale was a loser. Now, does that mean this strategy is going to be a loser 6 months from now? No, it's just a different time frame. But the mistake I made is I did no analysis and bet way too big. I didn't DCA down. Why couldn't I have bet 5 grand then? Now I can maybe bet more and bet a little bit with that allocation, which was trading profits. But it's like, why didn't I just put that back in and just leverage my account? This has been my own pattern. One of the reasons I hired Corby, right, is I gamble a lot of my stuff away on coins that might make me insanely wealthy or lose everything. And right now even though this has been a great move, like this and Tensor and some of the AI stuff, it's been great coins. Now, I'm just telling you how hard it is psychologically. To find these, I'm in very specific Telegram groups. I got everyone in here in August 5th, right? Okay. I think it was like $5 or $6. Guys, we rode that son of a gun up. I gave the signal to go all out around $57. Okay. I got so much shit from the groups that I was in, from the fundies, the fundamental guys. Oh, Matt's just scared. This guys, I'm actually surprised I broke principle and held it that long. I didn't even use a quadex. I went all in, all out. But it was a great, no need for greed. We got a freaking huge X on that. So that was, you know what I mean? Now, think about the phases. This phase, markets moving you know, market, the main purpose of markets, really, if you think about it, right, is the trade facilitation. You have to have some level of price agreement to have trade facilitation. Well, here, I know from a trading perspective, this is not a sideways thing, but this is just a sideways balance. There's not much, here's when it really shifted. And then we have this, new phase in the market, but these huge retracements. When you, at the end of multiple leg counts up, have some of the strongest candles, that's a huge sell signal. I don't want the biggest green candles to be at the 8 to 9 leg counts up at the end of this thing potentially. I want it to be at the start of the trend. When you see it at the end of a trend, that's a sign of exhaustion. You need to get out. We got out. We also got out. It's a huge hook from extremes here, huge sell signal from a momentum perspective. We get out on strength. Do I believe in this project? Do I get tips that it's going to be the beta to Tau? Yeah, but I'm still not going to fall in love with any of this crap. I don't care if they kick me out of that. So it is what it is. Now, here's another one I put a decent amount on, Tau. Remember, this actually is, it's actually, I got an ETF in an index, not a huge portion of that 5 coin AI index. I think it's like 2.5%, but it's still something, right? This is Tau. This is covering our AI bag, right? If you don't have a position, I mean, this is technically a very strong buy zone, but I mean, anything could happen. I'm just really surprised that these shit coins are holding up better right now than the S&P. I don't know I got to really think about this because when you step away from it, I was, nicely not involved emotionally into the markets, and my body really needed a break from it. When you're putting on size and doing this to pay the bills, and you're in it every day, you forget this is also a performance discipline, and your cortisol goes up when you put on risk. So, wow, John, obviously a huge breakdown here, but really, I mean, this is the key swing is right here. But yeah, no need to be first on any of this. This is pretty intense. Now, glad there really was no setup today, right? I mean, this has just been absolute chop all day. I'm glad we didn't get involved in it. This is a great day not to get involved. Now, the question everyone is asking, is it different this time? Will there be no alt season? What is going on? Now, fundamentally, what's happening is that the main drivers of the recent moves in Bitcoin have been institutional liquidity that has a very conservative outlook necessarily on its holdings, whether it's in profits. So while retail last bull run when it made money in Bitcoin would then dump it into all this crap and push these small caps up, and everyone was in euphoria, retail is terrified right now. I run a parallel channel that's completely free and I don't post anything trade wise like PPT, but we just keep it. It's almost like, people just, they bullshit on there. But when I opened this in 2020, was posting on Telegram in that channel, and I would occasionally post the trade ideas there. The sentiment was off the charts. It is completely dead. So I keep it open just as a sentiment gauge because sometimes people will bullshit there. Everyone's gone, and a lot of my channels, everyone's sentiment's dead. Now, if a value investor would say that when sentiment diverges from fundamentals, there's opportunities in the street. I would say yes, but you could also marry that with the timing of this. I mean, look at this coin LTO. It had a firm specific risk today where it got some type of reprimand from Binance, and the panic of this coin dropping like this is insane. I mean, it's down 29% on the day. And this is an Elon pick that's doing real world asset uh, tokenization. And it's like, is this an opportunity? Because it got to $1 last full run. I mean, you can put 400 bucks on it. You know what I mean? It's that kind of thing. That's the thing. Now, the mistake I made, I talked about last time, is that during Euphoria, I was betting like a son of a gun. I mean, I'm still holding this from last fall when I put $56,000 on it, and it's an absolute trash. This is when I was in Euphoria, making money on good sound principles, but then dumping it into other people's strategies, mutating it like Elon's trades. Because, his performance, even though mine was good, his was so good, I was like, wow, what is he doing? Well, he took $10,000, flashed it in the channel and then got it up to like, I think 1 million or something like that with his, a very different strategy than what I was doing. What I should have done is just took $10,000 and done the same thing, except I took a huge amount of money and thought like, well, I'm going to become a billionaire. You know, that was really stupid. It was just this like euphoria. There's nothing, the market doesn't care about your hopes and your wishes or anything like that. It just cares about the data and what's going forth. And, right now, that's why I'm shocked this is holding up. Once we reversed here, this is an engulfing pattern, but, decent support. But, why did this hold today? Or at least not even probe a little deeper into the back of the zone. And the ES completely breaks this, and had a nice double bottom that we caught yesterday, at least yesterday, for some moves are up here, but also got out, and then look what's happening. It's just, and I didn't really look underneath the hood today of the S&P. I can actually gauge what's going on with all the other stocks in the market, unlike the index. I'm unlike an equity. It's actually the only indicator I use that's not a derivative of price, because all these averages and fancy things and momentums, the oscillators and whatnot, they're all just derivatives of price. And I can pretty much remove all of them and still kind of trade. But the internals is here's the internals. The internals are the one indicator that's not a derivative of price. It's really based on true quantitative data. This is called breadth analysis. I learned this from one of the greatest ES traders out there, and I don't think anyone really does it quite like him. But once I teach this, I'll say that it's like people become kind of Google gaga with this, and basically what it can do is that you become confirmation bias, and you will misread it all the time. We kind of have to use it counterintuitively, right? Most of the time, it will confirm price, and it won't give us anything more, and you shouldn't really look at it. But when there's divergences, disconnects, when there's extremes, that's when it's giving us an extra edge. Now, let's see what it did today, right? Now, keep in mind, this only starts at 9:30 a.m., so it opens when the physical exchange opens. So let's go to 9:30 a.m. here. The top's price, this is the 80 line, and this is the NYC tick. So you can see here, right? This actually, I said not to trade today, but just to show you that how this was, and I'm not saying this in hindsight. So at 9:30 a.m., right? Let's go on a smaller time frame, right? So imagine so this was at 9:15. So the market opens and it just blasts up here, right? I'm not saying like, oh my God, open drive, somebody would buy that. But the idea is that, as this is going up, this is opening at minus 2,000, right? Uh, right. And as we're opening and going up higher, this is around, minus 1,000. These are all extremes, right? This is basically saying that, now granted, right, we opened here, right, and we closed, right? So we're around the same price that we closed at. So if this was going to be truly a sideways non-directional day, which you might assume because, yeah, yesterday was a trend down day. We know that there's less odds consecutively to have two downtrend days in a row, all things being equal. But all things aren't always equal. This is a contextual, right? It has to be based on the market context, right? Well, this is basically saying that even though this opened around this with the same price this closed, there should be around the same, it should be around zero up here. Because we opened, basically what the 80 line says is how many stocks are open today versus yesterday's close. Well, if I'm around the same price, it should be around zero, give or take a couple hundred. What it shouldn't be is it shouldn't be around up here. Like imagine it was up here before the tail and this was around the close. It shouldn't be at minus 2,000. That's a bearish disconnect. If you said to me, Matt, this isn't quite at the high of day, it's sort of at the RTH extreme, and you were like, you know what, 41, I mean, it's kind of a wide stop here. But if you said, I'm going to short that because this is a bearish disconnect, this should be around 0 to minus 300 to plus 300. That would be normal, or even 5 to minus 5, or, minus 2,000 is like, oh shit, this thing's going down. I mean, with the right context, because this is a continuation, right? And you'd expect it to be at the same, at the same price. But remember, right, it's also the magnitude of move. This broke, right? 1, 2, 3, almost 3 days of market. I know this is at the end of the day and it's part of that day, but this is pretty much almost 3 days of market structure that this broke. right? So you're expecting some continuation as this pops up, but then when you get the minus 2,000 and the selling pressure. Now, what did this do the whole day? This did what a typical downtrend day would do, is that you would think that an 80 line should just mirror price and go down. Not always. Sometimes when it opens up at an extreme, I told you that plus 2,000 and minus 2,000 for the NYC advanced decline line is an extreme. Now you might say, well, Matt, you trade the S&P. Why aren't you using the S&P advanced decline line? Because I want a greater breadth. If you want to, you can. I don't have a problem with you using it. But that would be minus 500 plus 500. But this is, opening at this, that, going sideways, that's confirming. So how could you use that, right? Well, let's say you did short this at 9:30, or let's say you didn't. You wanted a conservative. You waited for a double top, right? So at 12:15, you came back from lunch. This is a V pattern. It's a weak V. You also know that it's holding at minus 2,000. And then when it came up here, so you know that it's holding at minus 2,000. And then when it came up from lunch, it's kind of topping here, right? Double top. It's not the overnight, and I could draw a zone here, but it is technically a new zone because with the S&P, the next, a key reference area is the RTH high. That's the regular trading hour high. That would be here. So it wouldn't be incorrect to short here with the stop here, short here with the stop there, rather than have a huge wide one. In the context of continuation, because this is a giant magnitude move, and because we're opening on a huge extreme where you're thinking this has such low odds. So if I was shorting this psychologically, and this is a short that I would take because this is a bearish disconnect, I'd be thinking, man, if I was long right now, I'd be really scared and take profits because this is at minus 2,000. And then if we go up here at 12:30, what was the 8? So this is actually showing like how many stocks are up versus yesterday's close relative to price. And this is showing like the heartbeat. So what was happening in the NYC tick at around 12:30? Exactly what I would want it to be, right? I would be shorting when this is looking the most bullish. That's called a shorting with the tick extreme. You don't want to, because I want to fade on an exhaustion. I want this to be at its exhaustion point while this is at minus 2,000 with a very low chance. I've never seen this at minus 2,000 where this is a V recovery. It's such a 15-minute time frame. It doesn't matter. Right? So anyone that double bottomed here and was holding past this was being really foolish if they don't look, because they're looking at this. Now, I'm not just looking at this. We have to actually do a top-down plan irrespective of what I just showed you with the breadth analysis. Now, there's also divergences. That was a disconnect. That was a really great example of a disconnect. But let's just go top-down. What was this doing? Right? So if we're looking at the close yesterday, what happened? Well, we had this double bottom, but we came up to here and we didn't close with any type of engulfing pattern, but rather we have this indecision candle where sellers and buyers whipsawed it both ways. Now it closed a little bit of an extreme, right? But what's happening on the AD line here, right? Right? This is a day where we're really glad we didn't trade. There was really no edge here. This is ambiguous, right? It's coming up into resistance in the context of what happened before. There's a top here. We didn't get a breakout. This is a perfect day sideline, and we can see why, right? And that's what we're gonna do. Now, tomorrow's Friday. We talk about this thing called a Give Back Friday, right? This recently broke down. That might be the smart move as well. I mean, we're no need to be first, or to be the guy that says, "Oh, now I'm the genius that's going to short." Well, you're now at the end of a downtrend. This is when this thing can pop up a little. This is how people go fucking nuts with trading. Right? You have to know when there's an edge or not. We have to wait for pause days if we want to fade this. We know that the bears are clearly in control because we just had a balanced breakdown pattern right here, right? And yes, this is a major pullback that launched us up here. I'm definitely looking at that. But let's not kid ourselves. How did we get there? We got there very bearish, right? A more likely scenario is that this plays out a little bit. And then maybe here, this is when we get a stronger time, because then this trend would now be exhausted with this 100% range principle in the intermediate term, guys. Because really, I'm using this fractal thing to gauge on this time frame. But when did I really get confident? The larger we go, the more confident you should get. When there was a triple top in the context of a multi-year 100% versus a couple of, this is like a month, and this is like a couple of years. So I'm betting on always the bigger pattern. Boom, boom, boom. If you keep holding here, like I mean, I had someone who put me in touch with their uh, wealth manager who was voted the state's number one female wealth manager, blah, blah, blah. They have such a long-term view. Why wouldn't you take de-risk for your clients here? This is food. Yes, yes, it always goes back up. It always goes back up. But why? Like, why don't you have some? This is a principle. I guess because they're worried that if they did this and they were quote unquote wrong, that they would feel, guys, if you sold 75 to half, or even if you went all out and you were like, and we're talking, you got in all this way through here, and this still had this mega breakout, something, you would have still done the right move. The incorrect move would be to hold through this and then to break out. Because on your system cheat sheet that I talk about, look, we have leg count exhaustion. This is a computer program inputted. That's why I was trying to automize this. Leg count exhausted plus 100% range count exhausted plus triple top price pattern plus hook from extremes, bear, 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 bear. Then when it opened, there was a disconnect, smaller time frame confirming. Man, if you started to, if you shorted that, happy as heck right now. Remember, the more enthusiastic I get on an exit, if you're down to do it, that's when you can start using the same principles to short. And I do give short setups, but remember, there's so many guys in the channel. Not that we got 200 people in the channel, but we got dedicated people in the channel. They're traders plus investors plus both. Everyone who's an investor feels like shit right now. I'm not going to be like, yay, I'm shorting. I'm going to post those long ones. But yeah, when there is a principle for a short, like I said, I'm going to gently express that there was a short. I did take a short live the other day, but it was like I did it in an educational way. And, trust me, I want this to be in a bull market going long on my day trades, swing trades, and my portfolio mooning. We all do. We want the party. But guess what? This is the nature of markets. And, things can't go up forever. We're in a new one leg down, right? So two up. Now we get the one leg down, two try, now three. Okay, so we're on the third leg. We know the third leg is not something that then is like, oh my God, now I'm sideways up to sideways. This is like, okay, third leg. Remember, 5 to 6 is when you should. When you have leg count, remember, never take one of these principles that's all part of this synchronistic system. Never take one of them in isolation. That's trading in a vacuum. Leg count plus 100% plus at major support. We have definitions for what major support is, what a bull bear zone is, and what a minor micro bull bear zone is. And that's when and then you factor in how the price gets there, and then you look on the smaller time frames for an entry, and then you humbly get out when you're wrong by having that anti-martingale fixed percent risk model. The problem is that if you're DCAing, you're not getting out. And the investors DCA because it's all they know how to do. I just am personally am just kind of just shocked that this is holding up better than the ES. So this is recently. So if I wish I had the ability to I could do this, but if I could overlay the two, you could see that there's a lot of parallels. Now, remember on this overshoot where we could potentially in mid-April, right around here, maybe get this stronger move out. I kind of move these around so I could see it. It is based on a pattern versus pattern war because we do know this is a balance where we had this giant double top W pattern. Obviously, there was a bearish divergence here. But remember, right? This bounce breakout pattern is now broke out into the downtrend because all balances eventually will end in a trend. And now we're trending down and now we're bouncing again. Are we going to trend down again? Is the bear over? Well, this balance here, fortunately for us, is smaller in time and visually than this balance. This bounce breakout trend is bigger so far than this bounce breakdown trend. So I'm going to personally bet once this neutralizes on the bigger pattern. But it doesn't mean I have to be early. And I'm also going to investigate that idea with the fact of this leg count with this 100% range principle. Are we in a 100% range principle? Let's apply the same thing that we did to ES to call the tops and see where we are. No. See, right? 132,000. That's reasonable, right? Because why is this? I mean, I see this on a lot of time frames, and I don't want to get married to one thing. I mean, it doesn't always work. Nothing always works. That's why this is an amalgamation of all these different factors in a probability calculation scale. But it works enough, because and it works psychologically because when people more than double their money, they're happy and they take profits, and that's all it is. And that was how we arrived there. Now, yeah, I mean, this is holding right now. I mean, I'm just taking it all in, right? And I gave it, this was basically a long, but the way that price arrived down in here, no need to be first today. Now that we got the pause day, now tomorrow there might be lower risk entries. That's what I'm thinking about. I have to see, like, is there a lower risk entry potential? But still at the same time, right? No need to be first here because, you know, to me personally, right? We went up, right? Then we had this engulfing pattern. And remember, we talk about, you know, these moving averages are just showing this downtrend bias, right? Because this price fluctuation is derivative of it. And this one out here is simply just a standard deviation out. But what I'm afraid of, it's going to be happening right now for Bitcoin, and this is a bigger picture idea, is this death cross that's looming. Okay. And unfortunately for my investment in SWE, because this is a channel where we don't shy away from our mistakes. We bear it all publicly because that's how we improve. The death cross already happened. And that's because I violated a rule of my system where I traded on a vacation and wanted to party and feel like a gambler because I like to have fun, man. Just broke a rule, man. I mean, I trust me. I've had many lessons with Kobe about not doing this in the past, but I still broke it. Oh well, guess what? I know in the future, even though I'm getting better, I'm probably gonna keep breaking a rule or two or make mistakes because great traders make mistakes, and I'm gonna just quickly recover from it. That's what you got to do. But granted, this didn't happen at the time, so I didn't have that information. But I showed you all the reasons why it wasn't a good trade to begin with, and I showed you all the reasons why I greedily made enough money on it and could have used a quad exit. So, but the idea is that the death cross that I'm worried about for Bitcoin is already manifested on Sweep, right? So let's get rid of this one for now. That one's too fast for this idea. Now, remember, don't get married to any moving average. It doesn't have to be these. These are just the classic ones and I want to use classic ones because this is a self-fulfilling prophecy. If a lot of other people believe it, then it might come true more, right? So this is the slow one, this is the fast one. Unfortunately, my friends, it already crossed. So, right, it crossed here, right? So I still think we need one more, like, this, I don't trust this double bottom. I'm not trusting any of this stuff, not even this one. I still think we need boom, boom, and one more overshoot, a dynamic triple inverse, a dynamic bottom. When I say dynamic, I mean it's overshooting, not this pure one where everyone can see the pure level. And then there's this one that's like not quite a double bottom. It's the other one, because I want the edge of this zone where everyone who's happy who made money here is going to buy again, simply because they saw it, and that's what I and that, and everyone who's just is going to be done. But we'll see. It's holding. It's not enough. This is I'm not trading SWE as a trader. This is I don't recommend day trading SWE. I just day trade Bitcoin and not Ethereum anymore because of the hack. Um, but yeah, guys, I'm so shocked at how well ES is holding up now, decoupled from Bitcoin like crazy. Wow. Um, Now I'm just going to go through a couple of things. Now you guys know I'm a big believer in DOT. I invested a lot in DOT. I made a lot of money in DOT last one, and I've reloaded again quite a bit into it. I reloaded before 4, just below. I said my signal was, hey, DOT's below 4. This is a DCA. This isn't a trade. Now, why do I like Polkadot? Well, technically, last all-time highs, it was at $56. And it's Gavin Woods. It's got more devs than fundamental than any other project right now, and it just launched the Polkadot Trust, which just got approved by the SEC. So now there's potential for institutions to get involved, which I like because I feel like the institution money, all these governments and things, they're going to go, if they're going to divert from Bitcoin at all, it's going to be Ethereum first, which they're a little bit, right? Ethereum's not, not doing so well right now, despite what Eric Trump said. I think it's a good time to buy Ethereum. I said that before it dumped. And but I think they're going to go into these fundamentally sound projects like Polkadot, because bigger ones, Polkadot, Swede, the top 20, the days of the memes and even unfortunately like the pirate coins for now are done. And you guys know I like privacy coins and whatnot, but I lost a lot on the pirates because remember when, if you have a system you're developing and a lot of people have integrated a lot of the principles of PPT into that system, but also bring in their own psychology and what they've learned in the past into their daily call. Just whatever edge you want, you just stack it into your probability scale. If you use your Ichimoto clouds, you can stack that. But it's the idea that folks will deviate too much from their systems when they get into trouble or they go into a losing streak. And that's the mistake that I've made in the past. And it's one that you really should avoid. Your system should already have implicit in it the ability to withstand a series of a losing streak because that's statistically probable. Even in a winning system, over a large sample size, you're going to get quote unquote this random distribution of losses. What people do is they freak out, get emotional, do stupid stuff, and then start deviating. So my situation in the last bull run wasn't necessarily that wasn't triggered by a losing streak. It was actually triggered by something much worse, believe it or not, as a winning streak. I lost way more in my winning streak because I became so euphoric. I thought I could walk on water. And that's when I just flippantly started what's Jeff Berwick saying? Oh, Pirates going to 50? It wasn't good that the 28 Gs I put on at 7 doubled to 14 because Jeff Berwick knows that it's going to go to 56. In fact, he had a video that said it was going to go to 1,000, and I believed him, and I liked the movement. I was listening to the music every day. But that's not investing. That's not trading. So, rookie mistake, but don't lesson learned. You don't deviate from your plan. I deviated it for the TDB, and I also deviated to Elon trades, betting even way more than that on even smaller micro, hoping that I was going to become, like, oh, really? So I had a buddy who put $100 on a coin called Flowkey, of which after his Uniswap took out $50 in Ethereum fees, he only had $50 worth of this coin called Flowkey, which is a European coin. It's like on some soccer clubs or something. It's a very small microcap. I don't know anything much about it. So he bought it for $50 of investment, $50 investment. I don't know what price. It's at 27,000. Okay. So that's the situation that we're dealing with. Okay. That could lead one to some gambling. So I'm like, okay, if you put $50 on it, got to 27, what would happen if I put the market will correct such assumptions quickly if you're violating principles. But Polkadot is one I definitely believe that people should get involved in because not only is this a nice support level here, it's got the institutions getting involved and possibly even bottoming. So, but guys, that's it for today. I'm kind of spent right now. I kind of gave it all, even though we're in a down market right now. I think you should be vigilant. Don't rush into anything either way. Not trading is trading and sidelining is a position. So I'll see you guys in the room tomorrow. Take care, everybody.